Wanted to take a moment just to show how the currency strength 28 meter can be so effective in identifying potential entries. I have four strength meters shown here. I have the 5-minute, I have the 15-minute, the 30-minute, and the 1 hour. And I've attempted to align them directly on top of one another, as you'll see in a second. I'm using as an example the Australian yen pair, the Aussie yen pair, and this was a trade that was on I guess it was on February 28th. And on the strength meters, I've adapted it to my own settings by putting a bold red horizontal line at the 50 fib level. It's my understanding that it's best to stay out of the market until the market X's go above that level in the 5-minute chart. That's how I interpret Bernhard's explanation. Additionally, I have put a line at the zero, a more recognizable dashed line here at the zero line on each of the charts as well. And I have these strength meters set up so that the lines for both the Australian and yen currencies are bolded, so it's it's easier to pick out their configurations. Over on this side, I have some of the indicators that I like to use. I have a channel of moving averages here. I have the 15 EMA here. I have have the Bollinger Band on here because I like to look for compression and then expansion of those compressed areas. I have two MACDs, a short-term and a longer-term MACD, and I have what's called the TDI, or Traders Dynamic Index, which is a Dean Malone Compass FX tool that I find to be helpful. The vertical lines show you the different session openings. This yellow dotted line would be the Australian Open, which is considered by many to be the daily open. That's 5 p.m. Eastern U.S. time. So here's the opening on what would be the February 18th at 5 p.m. Eastern time, right there. And then it closed at 5 p.m. Friday the 19th, New York Eastern U.S. time zone, right here. I also have an indicator that draws my support and resistance lines automatically, which can prove helpful as well. And you can see the identity over here: weak resistance, another weak resistance, an untested resistance over here, and untested support, meaning the price has not yet come back and touched those. So let's see, as an example of an entry, I would, as the daily session would open here at 5 p.m. New York time, the Australian Open, I would look for price action. And I'm using my multi-sync cursor tool so you can see it moving on all charts. What I wanted to do is to identify this area right here, which would have been the 7 p.m. U.S. Eastern Time opening of the Tokyo market, and you can see that everything was suggesting a downward movement. This is a real short MACD, so this will be very volatile. My longer term MACD was suggesting a downward direction, and my TDI also was beginning to suggest a downward direction. The market baseline, which is the yellow line, is level and just barely starting to tip down. The indicator, the signal really is as the green RSI line drops below the yellow, and it's also below the red signal line, and so that would have been reason to consider getting in. So if I place my multi-sync cursor right here, and I look over to the left at the 4 currency strength 28 sentiment meters, and you take a look at the yen, which is the yellow line, which is going up on all four time frames, and the light blue, which is the Australian currency, which is headed down on all four time frames, and you can see a reason to be confident that the direction is going to be to the short side. And sure enough, if we had gotten in at this approximate position, we would be looking at a trade that was 90 pips on its initial down move before a pullback or a retracement back up to the 50s channel, and then resuming its downward direction. So we thought this was a real good example of how Bernhard's indicator, using the different time frames, can give the trader confidence in getting into a successful trade.